You can Google this right here, S.2768. That was October 14th, 1942. Long time ago, right? But look what it says right here. The present consumption of silver for war purposes is at the rate of about 100 million ounces a year and is growing rapidly. According to the War Production Board, it's only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces a year. That's 1942. 3 years ago, where I said there's 500 ounces of silver in the top of a Tomahawk cruise missile. And at the end of my speech, a man comes up to me and says, I work for the DOD. I actually helped design the Tomahawk. He says, I think there's silver in it, but I'm not sure how much. I'll get back to you. Never hear from him again. I go back last year. This was 2 years ago. There he is. He says, you were right. I'll be damned. There's between 13 and 14 kilograms in the cone of a Tomahawk. It's 500 ounces. And he showed me all sorts of pictures and this and that. And he says, I think there is in all of these high-tech weapons. We'll think of aerospace, think of all of the high-tech weapons that the United States and the military-industrial complex has been making and selling all around the world, fostering and funding and providing weapons to all these wars. And so they always used to report silver in the supply-demand numbers. Here's last year's supply-demand numbers. We had a 240 million ounce shortfall last year. The year before, right here, 265 million. But let's look at the demand here. Industrial, 9%. Electrical and electronics, 9%. Photovoltaics, that's solar panels, 20%. Brazing alloy and solders, other industrial, photography, jewelry, silverware. Where's military? Where is it? Now, this is the picture of the COMEX market, okay? Look at this. This is the green line or the red line are the four big commercial banks that have short positions. And it's probably Citibank, Bank of America, JP, and Goldman. I don't know exactly who they are at the moment, but this is what the green lines are the red line. The green line are the largest 8 commercial banks, largest 8 traders on COMEX. So here's the bottom line. This right here represents 8 Western banks that hold the largest concentrated short position of any commodity traded on COMEX. Look at oil right way down here,
Wow.
right there. Silver, platinum, gold, palladium. But this is the largest concentrated short position. Now, the question is why? Now, here, remember what I said to you about the banks that are sophisticated, motivated, coordinated? Here's silver in the LBMA. You notice something? What they've been doing? They've been draining the world's exchanges because they know that the Western military-industrial complex, in my mind, has been suppressing the price of silver to make high-tech weapons. And if the price of silver went parabolic, it would be a problem. So they make it think that it is just an archaic relic from years gone by and there's no reason to own it. But then I'll ask you, why are there the 8 Western banks suppressing the price of silver more than anything else? Why? What is the reason? Maybe it has something to do with this, or maybe it has something to do with this. So my point I'll stop sharing is simply this, that silver is the most manipulated commodity on the planet. And remember in the LBMA, they're trading every single day 3.5 times global annual mine supply, of which 90+% of those contracts are paper until there's a problem. And that problem is, oh my goodness, the exchanges are being drained. And the all-time biggest monthly delivery or exodus out of the LBMA, 70 million ounces was drained, or 20% of that float was drained in January. And then we see another 8 million ounces come out last month.
Let me just come right out and say it. Silver is not what it seems. Most people have absolutely no idea what this metal really is, how important it has become, or the full extent to which its price has been artificially suppressed to prop up a broken financial system. You hear people call it the poor man's gold, but I'd argue it's more like the smart man's weapon. Weapon, yes, strategic, essential, and more valuable than anyone dares admit. Now, I want you to imagine this. The global supply of silver above ground is being drained in real time, not just because of investors buying coins and bars, which, by the way, have been flying off the shelves, but because this metal is being consumed. It's being vaporized into missile guidance systems, solar panels, electric vehicles, 5G infrastructure, AI tech, you name it. Once silver goes into those systems, it's gone. It's not like gold, where nearly all of it ever mined still exists. With silver, what's used is lost, gone, finished. Yet what are we told? That silver is cheap, that there's plenty of it, that it's just another industrial metal with some collector interest. Give me a break. Let's start with the facts. The LBMA recently saw one of the largest monthly withdrawals from its silver inventories in recorded history. Nearly 8.6% in just 30 days. That's massive. And more importantly, this wasn't silver going to retail investors. It wasn't going into vaults for show. This was silver being pulled for one reason: delivery. And that's the dirty little secret the mainstream won't tell you. You see, for decades, the price of silver has been set by a handful of Western banks, 8 of them to be exact, that have constructed a paper market so bloated, so divorced from physical reality, that it makes the entire system one hair trigger away from collapse. In the London Bullion Market Association and the COMEX combined, they're trading 3.5 times the annual global mine supply of silver every single day. Not month, not year, day, and 90% of that is paper. So when people ask me, Andy, what's the real price of silver? I tell them, whatever the price of desperation is when someone finally tries to take delivery on those paper promises. Because that's the moment the entire illusion unravels. And it's already started unraveling. Over the past few years, you've seen major countries, not fringe actors, but heavyweights like India, China, Turkey, and Saudi Arabia, accumulate physical silver in volumes that dwarf global supply. India alone has imported over 800 million ounces of silver since 2020. That's more than what exists in both COMEX and LBMA inventories combined. Why? Why are they doing this? Do they know something we don't? Well, of course they do. Let's go back to 1942, Senate Bill S-2768, which openly admitted the U.S. military was consuming 100 million ounces of silver per year and expected that figure to double to 200 million ounces annually due to the war effort. That was 8 decades ago. Now think about the modern battlefield. AI, hypersonic missiles, drones, laser-guided weapons, satellites. None of it works without silver. And yet today, the military's use of silver doesn't even show up in supply-demand charts published by groups like the Silver Institute. Why? It's classified, hidden, omitted. That omission should tell you everything. And then you look at the commercial banks, massively short silver for decades, and you ask, are they doing this to protect themselves or to protect the system? Because this suppression isn't just about profit anymore. It's about control. And we've now reached the point where that control is slipping. See, in a free market, the most sophisticated money, sovereign wealth funds, central banks wearing different hats, billionaires who don't advertise their wealth, they move first. They don't telegraph. They don't warn. They just move. And right now, they're not buying ETFs. They're not buying mining stocks. They're taking delivery, quietly, strategically, and with purpose. This is where it gets really serious. If COMEX and LBMA are allowed to keep trading over-leveraged paper contracts with no intention of delivering metal, we have a 2-tier system, one for the insiders who get the metal, and one for the rest of us who get IOUs. But what happens when the insiders all stand for delivery at once? What happens when the illusion can't be maintained? We find out how little silver is actually available. Let me put it this way. COMEX has about 36 million ounces of silver available for delivery, but it's standing against nearly 380 million ounces in open interest paper claims. That's over 10 times more claims than physical. What happens when just 10% of those contracts want real metal? Boom, game over.
So they're slowly draining the exchanges because I think these countries, India has imported over 800 million ounces in the last 4.5 years. That's more than is on COMEX and the LBMA combined. And I think they realize that silver is far more than industrial. It's strategic. And when you have the ability to suppress the price, create an illusion using futures contracts, well, that works until the world says, we're going to stand for delivery. This is the existential threat. This is the setup. This is the squeeze that is potentially happening. Now, guys like me have been screaming this for a long time. You can't run from mathematics. This is coming down to mathematics. I guess I'd say it this way. The only way to successfully manipulate a market atom over a long period of time is to push it in the direction that's going. And for a long period of time, no one wanted anything but Western securities and treasuries and didn't think about draining the LBMA or the COMEX or challenging it. Now, as I mentioned, these countries of China, Russia, Saudi Arabia, India, they're wealthy, coordinated, sophisticated, and motivated. And they are using this suppression that we've put on for far too long, like a jujitsu move, using your opponent's leverage against them. That's what is happening. And I really do believe Trump realizes this. And this is why he came in and said, we're going to tariff all of this stuff, do the exchange for physical, the Western, they're all saying, hey, we got to get the metal back here because we're naked, exposed on COMEX. Let's do an EFP. And then it starts to accelerate. And I think London said, wait a second, this might be bigger than we're being led to believe. I think it's bigger than we're all led to be believed. And my guess is that there's something in store big for gold and silver. Zoltan Pozsar, one of the smartest men I've ever met, said, we're in Bretton Woods 3. Well, Bretton Woods 1 after World War II when we took over for the pound sterling. Bretton Woods 2 loosely when we signed the petro deal in 73 with the Saudis. Bretton Woods 3, a system he says is all about transparency in commodities, a la blockchain and physical commodities like gold. So what did Elon say? Let's put everything on a blockchain, the assets, the liabilities, the gold. What did Judy Shelton say? 50-year treasuries, and then she said, I want to see stable coins pegged off of them. All of this stuff on a blockchain. Where is gold held? In the gold revaluation account. Everyone's screaming, let's revalue gold that's marked at $42.22 an ounce. Revalue it, peg it to a level to back your 50-year treasuries, which are redeemable on a blockchain, transparency, and commodities. And it's not just gold that's coming back. So yeah, I think this is a time for people to, realize that we are on the heels, it seems, of some monetary change where gold and silver will be added into the system along with digital technology to inspire confidence and trustworthiness in a system that's lost it, whether it be through inflation or weaponization of the treasury market or just the way we've conducted ourselves with the world reserve currency.
Now look, here's where this all comes together. If you've been listening this far, and thank you for sticking with me, I think you understand that we're standing on the edge of a major monetary reset. And no, that's not hyperbole. That's just observing the writing on the wall, the numbers that don't add up anymore, and the behavior of the smartest, best capitalized, most connected players in the world, who, by the way, are no longer waiting, they're acting. You have to ask, why are these entities pulling metal out of the system at record pace? Why are they demanding delivery when they could easily just hold paper positions like everyone else used to? It's because confidence is cracking, and they understand the difference between price and value. They're not asking, what's the spot price of silver? They're asking, how much physical can I secure right now before the system goes illiquid? That is not the behavior of people betting on a short-term trade. That's the move of someone who sees what's coming and is positioning accordingly. Now let me zoom in on something I think is critically underappreciated by the general public. Silver is no longer just a precious metal, it's a strategic one. You heard what I said earlier about its role in advanced weapon systems like the Tomahawk missile. We confirmed over 500 ounces of silver in a single warhead. Multiply that by tens of thousands of missiles, drones, radar systems, satellites, hypersonics. You begin to realize why the US government quietly stopped listing military silver demand in the World Silver Survey years ago. It's not because it dropped to zero, it's because it became a matter of national security, and yet we're burning through inventories as if they're infinite. According to the LBMA, silver vault holdings dropped to just 270 million ounces, with 8.6% gone in a single month. Think about that. And during the same month, the COMEX reported a whopping 17.5 million ounces of silver transferring out from bullion banks to non-bullion banks. Who are these buyers? They're not retail investors, I'll tell you that. These are institutional players, sovereign entities, or shadow buyers acting on inside knowledge. And when these entities stand for delivery in size, it's not for speculation, it's for protection. We're seeing the exact same behavior in gold. We now have central banks hoarding the yellow metal at the fastest pace since 1967. The World Gold Council reports over 1,100 metric tons of gold bought in 2022 by central banks, and 2023 and 2024 are pacing even higher. And yet, here's the kicker. The US isn't leading the charge. It's countries like China, Turkey, Singapore, India, and even Brazil that are gobbling up physical metal. In other words, the East is de-dollarizing. The East is hedging against the very system that the West thinks is still business as usual. And here's a question for you. Why is gold still priced at $42.22 on the U.S. balance sheet? That's right. The U.S. still values its official gold holdings at a price set in 1973. Meanwhile, the actual spot price is near $3,000. What happens when that discrepancy gets closed? What happens when Treasury Secretary Scott Bessent, or someone like Judy Shelton, pushes for a gold revaluation, which could inject trillions into the Treasury General account without having to issue more debt? This is no longer a theory, it's policy chatter, it's Bloomberg headlines, and it's exactly the kind of reset mechanism that central planners have used in the past. Let's not forget the historical playbook. In 1933, FDR confiscated gold and revalued it from $20.67 to $35 an ounce, a 69% devaluation of the dollar. In 1971, Nixon closed the gold window. In 1973, the price was officially revalued to $42.22. Every time we hit a wall, whether it's a sovereign debt crisis, inflation spiral, or geopolitical fracture, gold revaluation has been the nuclear option, and it's back on the table again. Now silver's role in all of this is even more explosive. While gold is money for nations and banks, silver is money for the people. It's also essential for the green transition, electric vehicles, 5G networks, and space exploration. The Solar Energy Industries Association projects a doubling of solar capacity by 2030. And with solar accounting for 20% of global silver demand already, this is a massive tailwind. But let's talk price dynamics. If gold hits $5,000, and I believe that's conservative, what does that do to silver? With a gold-silver ratio of 90-1 today, and the historic average closer to 40-1 or even 16-1 during bull cycles, we could see silver soar well beyond $100 an ounce just by regressing to the mean. If we go back to the 2% ratio Michael Oliver talks about, where silver is 2% of the gold price, that's $100 silver at $5,000 gold. If we go to the 4% levels we saw in the 1980 bull market, $200 silver, it's not fantasy, it's math. Now let's address the elephant in the room, the manipulation. It's not a conspiracy theory when JP Morgan pays $920 million in fines for spoofing the metals market. It's not a conspiracy theory when Deutsche Bank admits to rigging precious metals prices. And it's certainly not a conspiracy theory when Ted Butler and others show how Bank of America is allegedly short 1 billion ounces of silver. The rigging has been public, documented, and defended by the establishment as normal market making. But now, the jig is up. You cannot continue to short more silver than exists. You cannot promise to deliver what you don't have when the other side of the trade demands actual metal. And now they are. Sovereign wealth funds, central banks under shadow accounts, billionaires who understand the cracks in the system. They are calling the bluff. And I want to say this directly to anyone listening. Don't be the last one out of the theater. When this thing breaks, and I mean really breaks, you will not be able to get product. Premiums will spike. Physical will disappear. You might see spot prices saying $50 silver, but there won't be an ounce available under $100. The comics will become irrelevant. You won't care what the chart says when you can't get delivery. We've seen this before. In 2020, during COVID, silver went no offer in the retail market while the COMEX sat at $13. That's how manipulated the system is. Now imagine that at scale. Imagine it with sovereigns standing for delivery. Imagine it with retail demand exploding simultaneously as confidence in the banking system evaporates. You think the banking crisis of 2023 was bad? That was the trailer. The movie's coming. So what's the takeaway here? It's this. Gold and silver are not just investments. They're insurance. They're the exit strategy from a fiat system in terminal decline. They're the reset buttons when everything else gets repriced. They are, and always have been, the only real money. Everything else is credit. And if we're heading into Bretton Woods 3, as Zoltan Pozsar said, then gold and silver will play a central role in the next system. Blockchain might be the rails. Central bank digital currencies might be the interface. But the credibility, the collateral, The anchor will be metal. It is no accident that Elon Musk is talking about putting assets on the blockchain. It's no accident Judy Shelton is calling for 50-year gold-backed treasuries. It's no accident the Fed is exploring tokenized liabilities. The old system is ending, and what comes next will need trust, transparency, and hard collateral. That means gold. That means silver. I'll end with this. The time to act is before the herd, before the headlines, before the public wakes up. And if you're listening to this, you're already ahead of the curve. Get educated, get positioned, and get physical. Because when the music stops, and it always does, you don't want to be holding a chair made of paper.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.